Hailong, the former open-source, U.S. stocks lead the global cattle A shares will not be absent strong market outlook optimistic, the layout 2018 slow cattle market. Every round of market panic, there will be some people take advantage of bearish people, plunged last Thursday, many people turned pessimistic on the market sentiment. Market fluctuations in the slow market is very normal. Overall, the market is also gradually forming a money-making effect. Of course, the profit-making effect is still part of the structural market. This time, like 5G, domestic ships, artificial intelligence and other new white dragon horse plate represents the direction of the new economic restructuring has begun to show the 2018 stock market is to lay out these new white horse stocks, that is, the direction of economic restructuring, the industry leader in the subdivision. This year, the leading trades in the traditional industries rose sharply, setting record highs in succession. We will continue to seize the leading positions in these traditional industries and look for some new white stocks to seize the leading position in emerging industries so as to achieve good returns in 2018. Driven by the massive investment in infrastructure, the Belt and Road strategy and the supply-side structural reforms, the economy will continue to show a steady rebound in 2018 and stabilization in the economy will be the biggest basis for the stock market to emerge from the sluggish economy. As the economy improves, corporate profits have a chance of exceeding expectations. For example, after the supply-side structural reforms, cyclical industry profits showed an explosive rebound, which is fully reflected in the stock market this year. I think the profitability of such cyclical industries as non-ferrous metals, coal, steel and chemicals will still be expected to remain high in 2018 and these cyclical stocks have the possibility of a rally after a short adjustment. Consumption stocks have risen sharply in 2017, and there is widespread concern that profit-taking will occur. I think it is normal for a certain fluctuation to occur after a large increase. However, we must firmly hold a bullish outlook for the market and make a positive effort to tap more high-quality varieties and seize good market conditions in the afternoon to share the returns on the stock market. In 2018, slow cattle will continue. I think investors should continue to embrace blue chip. This strategy has not changed. In 2017, the global stock market was excellent, and there was 28 differentiation like A shares. Even the most bullish U.S. stock market, the three major indexes hit new highs on many occasions, but the real gains were made by large blue-chip stocks represented by technology stocks, while some small-cap stocks also performed poorly in the U.S. market. Hong Kong market is also the same. The Hang Seng Index hit record highs by the elephant dancing, the leading stock Tencent shares surging, the market value of an amazing 4 trillion Hong Kong dollars. A share as a global stock market cannot deviate from the global trend too much. I think in the global stock market are bullish into the context of the A-share bull market will only be late not absent. In fact, the Shanghai Index has risen more than 800 points since the beginning of last year and has been out of a slow-moving trend. If we only observe the Shanghai Stock Exchange 50, Shanghai and Shenzhen 300, these blue chip stocks, you will find a greater increase. From the beginning of last year, I told everyone that after the A-share market has reached the end of history, I strongly recommend high-quality blue-chip stocks represented by KSI 300, and now the earnings are all substantial. Towards the end of the year, on the one hand, institutional investors represented by fund insurance may wish to launch a wave of blue chips in high net worth, and on the other hand, many funds will have to pay off their earnings by the end of the year. Taken together, I think there will be a wave of upside A shares before the end of the market, firm 3,400 points. Cross-year quotes will appear as slow. Beef is not a month as a node in time, it is a long pickup, and I think slowing will last 3-5 years. So when everyone is doing stocks, must be time for space, by holding to gain. The debate over the new economic cycle is a hot issue this year. My point of view is that a new climate has emerged in the economy and the profitability of enterprises has been greatly improved. Instead of arguing whether the new cycle of economy opens up, we should consider how to deal with and generate good returns after the economic climate has emerged. For those who are pessimistic about the market, they have not, to a large extent, carefully studied the positive changes that have emerged in the economy. I think in the new economic cycle, there will be at least 3 aspects of investment opportunities. The first is the upgrading of consumption plate, such as liquor, home appliances, automobiles, food and beverage. Leading stocks have appeared better performance, although a substantial increase, but only the valuation level did not appear too big bubble. The second category is the cyclical stocks that benefit from supply-side reform. The profits have risen sharply and the stock prices will still perform well. The third category is to benefit from economic restructuring of emerging industries, such as 5G, artificial intelligence, domestic ships, new energy vehicles, etc. Will be the trend of the new cycle of opportunities. This is the most fundamental factor for cement price increases. Cement prices will inevitably drive the cement stocks, because the infrastructure stocks are mainly driven by performance. Good performance stocks tend to have better stock performance. So you can focus on the performance of cement stocks at the end, has recently been started. The recent 3 major U.S. stock indexes hit a new high. Many people are worried that the U.S. stock market will end or highs. It is noteworthy that although the United States stock's strong, but this round of up is actually driven by performance. Of the top 10 U.S. market cap stocks, 7 are technology stocks. These technology stocks have very strong profitability and very good performance growth. This is the reason for the fundamentals of the U.S. stock market. Therefore, there was not a lot of bubbles after the U.S. stock market hit a new high. Second, because the long-term U.S. Interest rates are low and inflation is not high. The reason for this phenomenon is related to the technological revolution. The traditional factors that promote economic growth are labor and capital. The current scientific and technological progress has boosted the efficiency of total factor production and thus boosted the economy. The emergence of e-commerce directly connects producers and consumers, reducing a lot of intermediate links and reducing the intermediate link costs, thus improving the efficiency of economic operations. Therefore, we see that the profits of large U.S. companies generally exceed expectations.